Most people hear family office and think Ambanis around a table planning billion-dollar moves, but here's what nobody tells you. The same logic protecting a 10,000 crore empire can protect your 10 crore portfolio. Because beyond a certain point, wealth stops being about returns and starts being about responsibility. A family office isn't a luxury reserved for the ultra rich. It's simply the moment you realize your money needs own system, not because you have made it, but because your financial life no longer fits on a single page. When you own multiple properties across cities, run businesses with partners, hold equity position in startups, have global exposure through US stock or Dubai real estate, dependents counting on you for education and retirement. Digital assets like crypto wallets and goals stretching beyond your lifetime into the next generation. You have crossed that threshold, whether you realize it or not. This is when you need a personal CFO watching risks you can't see, market crashes, regulatory changes, liquidity crunches, and investment strategist allocating smarter than emotions ever will across equity, debt, alternatives, and global markets. A tax expert closing every leak through Section 54 EC reinvestment or LTCG harvesting and international tax treaties, and an estate lawyer ensuring your life's work doesn't become a courtroom drama between your children someday. Billionaires understand one fundamental truth that most people miss. Wealth is created by taking calculated risks in your 30s and 40s, but wealth is preserved by controlling those risks systematically in your 50s and beyond. That's exactly why they built liquidity buffers for 24 to 36 months of expenses sitting in liquid funds and overnight mutual funds. Define annual risk budgets limiting how much capital can go into volatile assets each year. Set clear rules through family constitutions about how much the next generation can invest before turning 30 and maintaining live dashboards showing their entire balance sheet, assets, liabilities, cash flows, tax position at a single glance updated monthly. They also allocate meaningfully to alternative investments that most retail investors never access. AIFs targeting 12 to 15% with lower volatility, PMS strategies focused on mid-cap value plays, hedge funds using long-short equity to profit in both bull and bear markets, private credits lending to NBFC at 14 to 16% fixed return, deep tech VC funds betting on AI and biotech before they go public, GCC real estate offering 7 to 8% rental yields in tax-free jurisdictions, and global ETFs tracking Nasdaq, S&P 500 and emerging markets, not because they want to beat the market or chase the next multi-bagger, but because they want predictable, uncorrelated ecosystems that compound quietly in the background while they sleep, reducing overall portfolio volatility and creating multiple income streams that don't depend on a single economy or sector. The real magic though happens in succession planning, which is where 90% of Indian families fail catastrophically. Setting up private discretionary trust that protects assets from legal disputes, drafting clear wills that specify who gets what without ambiguity, creating digital asset vaults without password, and recovery keys for crypto wallets and international accounts, establishing family constitution that define decision-making protocols when the patriarch is gone, and building business continuity protocols so the family enterprises don't collapse when the founder passes. Because the biggest threat to generational wealth is not about market crash or bad investment. It's the family itself when structure, communication, and legal clarity are missing. A family office eliminates that blind spot completely. It replaces confusion with clarity, reactive decisions with proactive planning, and transform wealth from just a number in your bank account into a legacy that outlives you and serves your children's children. And here's the part most Indian HNIs completely miss, which cost them crores in inefficiency. You don't have to build a giant office with a team of 15 people, rent expensive premises in BKC or Golf Course Road, or spend 2-3 crore annually on salaries. Even a 10 crore family can operate virtual family office with a coordinated network of specialists, a fee-only financial advisor who reviews your portfolio quarterly and rebalances based on goals, a CA who handles tax planning, a compliance and ITR filing across all entities, a lawyer who drafts trust and wills and keep them updated as law changes, an investment specialist who sources deals in AIF, PMS and unlisted equities that you had never find on your own, and a risk consultant who stress tests your portfolio against worst case scenarios like medical emergencies, business losses or sudden income drops, all working together behind the scene, coordinated through shared dashboards and quarterly review meetings for a fraction of what traditional family office cost. In fact, many families only realize how dangerously scattered their finances are when someone independent reviews them holistically for the first time. Properties bought in the wrong names, creating tax nightmares, insurance policies that are either massively overinsured or critically underinsured, equity portfolios with 40 stocks but no clear allocation strategy, FDs earning 6% when debt mutual fund could give 7.5% post-tax, no nominee updates in 10 years, no succession plan despite having 50 crore business and international assets that nobody in the family even knows how to access if something happens. And often, even a simple 360-degree audit of the current structure reveals decisions that can save years of future headache, lakhs in unnecessary taxes, and prevent family disputes that destroy relationships and wealth simultaneously. So, if you have ever felt that your wealth has outgrown the way you manage it, if you are spending more time worrying about money than enjoying what it should provide, if you are not sure whether your assets are working together optimally or just existing separately in silos, you are already halfway into family office territory, whether you call it that or not. The question isn't whether you need this, it's whether you are ready to take one honest professional look at what you have built and see the gaps you can't see from inside. If you want that perspective, let's take a structured look together. I'll show you exactly what you might be missing, where the inefficiencies are hiding, and how to fix them with a clear step-by-step roadmap that's specific to your situation, not generic advice that applies to everyone and no one. Thank you.